welcome back to Prime Wealth. I'm Jordan, your host for today, and I'm so glad you're joining us.
Hi there, I'm Alex, and I'm really excited to be here too.
So today we're diving into something that a lot of folks over 40 might find really interesting: dividend investing. It's all about building those passive income streams, right?
Exactly. You know, it's a strategy that can really help create a more secure financial future, especially if you want to enjoy life without constantly worrying about your next paycheck.
Yeah, and I think a lot of people think investing is just for the young folks, but that's not true at all. You can start building wealth at any age.
Absolutely. We'll talk about what dividends are, how they work, and some practical tips on how to get started, even if you've never invested before.
And we'll share some common pitfalls to avoid too. It's all about making informed decisions so you can feel confident in your financial journey.
Right, and we'll also touch on the importance of diversification and how to choose the right stocks that pay dividends.
So if you're ready to explore how dividend investing can work for you, stay tuned.
Let's jump right in.
Yeah, let's do it. So, Alex, today we're diving into something really interesting: dividend investing. I think it's such an important topic, especially for folks over 40.
Absolutely, Jordan. You know, when you hit that milestone, people start thinking about income in a different way, right?
Exactly. It's like retirement isn't just a far-off dream anymore. It's becoming more of a reality.
Right, and that makes the idea of building passive income streams through dividends super relevant.
Yeah. I read somewhere that about 70% of people over 40 are really worried about having enough saved for retirement. That's a huge number.
It is. And when you think about it, many folks in that age group are starting to feel the pressure of not just saving, but also generating income that can, supplement their retirement funds.
Definitely. I mean, it's not just about having a nest egg anymore. It's about making sure that nest egg works for you, right?
Exactly. And dividends can be a fantastic way to do that. They provide regular income, which can be especially comforting as people transition into retirement.
Right. And I think there's this emotional aspect too. The security that comes from knowing you have a steady stream of income. It's huge.
Yes. I've had clients tell me how reassuring it is to receive those dividend checks. It makes them feel like they have control over their finances, even if the market is a bit unpredictable.
Speaking of unpredictability, we've seen some crazy market fluctuations lately, haven't we?
Oh, for sure. And that's why dividend stocks can be such a solid choice. Even when the market dips, those companies that pay dividends often continue to do so.
Yeah, it's like they're saying, we're in this for the long haul.
Exactly. Companies that pay dividends tend to be more established, They have a history of stable earnings, which is a good sign for investors looking for consistency.
And I think a lot of people might not realize this, but dividend investing can actually help mitigate some of that market risk.
Right, because, if the stock price drops, you're still getting that income from dividends. It can soften the blow, so to speak.
Totally. I mean, I think about my parents, for instance. They didn't have a ton of money saved, but they invested in some solid dividend-paying stocks.
That's a great example. Did they find it helpful?
Absolutely. They were able to rely on those dividends for extra spending money, like traveling a bit more in their retirement. It really added to their quality of life.
That's fantastic. And I think that's a key point. Dividend investing isn't just about the money. It's about the lifestyle it can help create.
Right. And it's about peace of mind, too. Knowing that you have that extra income coming in can really take some stress off.
And, with the current trends, more and more companies are actually increasing their dividends. It's like they're committed to rewarding their shareholders.
Yeah. I saw a statistic that showed dividend growth has been outpacing inflation, which is a big deal for retirees.
Exactly. If your income keeps up with or even outpaces inflation, then you're not just maintaining your lifestyle. You're potentially improving it.
That's a great point. And I think there's also the factor of time. People over 40 have the advantage of time on their side to let those dividends reinvest and compound.
Yes, compounding is a powerful tool. Even if you start small, if you keep reinvesting those dividends, it can really grow over time.
It's like planting a seed and watching it grow, isn't it?
That's a perfect analogy. And it's not just about the immediate cash flow. It's about building a legacy too.
Wow. I love that. It's about creating something that can support you, and perhaps even your family down the line.
Exactly. And, with the rise of technology, it's easier than ever to access information and tools to help you with dividend investing.
Yeah, I mean, there are so many apps and platforms now that make it simple to buy and track dividends.
And for those who might be intimidated by the stock market, starting with dividend stocks can be a less daunting entry point.
Yeah, it feels more approachable, especially when you see those dividends coming in.
Definitely. And for people over 40 who might not have a ton of experience, it helps to have that tangible reward.
And I think it's worth mentioning that dividend investing isn't just for the wealthy. Anyone can start,
Absolutely. You can begin with whatever amount you're comfortable with. The key is to start investing in your future, even if it's just a little at a time.
Right. And you can build up from there. The important thing is to take that first step.
Exactly. So for anyone listening today, if you're over 40 and thinking about how to secure your financial future, dividend investing could be a really powerful tool in your toolkit.
Yeah. And we're going to dive into some core strategies next, so stick around. There's so much more to discuss. So, Alex, let's dive into dividend investing. It sounds a bit intimidating to some folks, right? But really, it can be a great way to build passive income.
Absolutely, Jordan. I mean, dividend investing is all about generating income from stocks, which can be pretty appealing, especially for those of us over 40 looking to secure a financial future.
Yeah, for sure. So, where do we start?
Well, first off, it's important to understand what dividends are. Essentially, dividends are payments made by a corporation to its shareholders, right? So when you own shares in a company, you can actually receive a portion of their profits.
Got it. So it's like being rewarded for owning part of the company?
Exactly. And this can be a great way to earn money without having to sell your shares. Now, one of the core strategies is to invest in dividend-paying stocks that have a solid history of increasing their dividends.
Okay, history matters. What should we look for in those companies?
Well, a good rule of thumb is to look at companies that have consistently increased their dividends for, say, at least the last 10 years. This shows they have a reliable business model and are committed to returning profits to shareholders.
Right, so a track record is key. Any examples of sectors or companies that are known for that?
Sure. Utilities and consumer staples are often reliable sectors. Companies like Procter & Gamble or Coca-Cola, they've been around a long time and have a solid history of dividend growth.
Makes sense. So it's about finding those stable companies. Are there any metrics we should keep an eye on?
Definitely. One important metric is the dividend yield, which is calculated by dividing the annual dividend payment by the stock price. A higher yield can indicate a better return on your investment. But, it's not just about the yield.
Right, because sometimes a super high yield can be risky, right?
Exactly. If a company is offering an unusually high yield, it might be a sign that something's off, like potential financial troubles. So it's crucial to also look at the payout ratio.
Payout ratio? What's that?
The payout ratio is the percentage of earnings paid out as dividends. A lower payout ratio, say below 60%, is generally safer, as it gives the company room to grow and reinvest in the business.
So if they're paying out too much, they might not have enough left to keep the business healthy?
Right on. You've got it. And, also, check the company's earnings growth. Ideally, you want to see consistent growth in earnings, which supports continued dividend payments.
Okay, so consistent dividends, reasonable yields, manageable payout ratios, and earnings growth. That's a solid checklist.
Exactly. And, it helps to diversify your dividend investments across different sectors to spread out risk.
So, not putting all your eggs in one basket?
Exactly. A diversified portfolio can help protect you if one sector struggles. Maybe you want to sprinkle in some tech stocks with dividends, like Apple or Microsoft, along with those utilities.
Yeah, I like that mix. It's like having a balanced diet, but for investments.
That's a great analogy. And another strategy is to reinvest those dividends. You can use a dividend reinvestment plan, or DRIP, which automatically buys more shares with your dividends.
Oh, that sounds smart. So it's like compounding your returns?
Exactly. You're essentially buying more of the same investment, which can really accelerate your growth over time.
But let's say someone doesn't want to do that. What's another option?
Well, they could just take those dividends as cash. It's totally up to individual goals. Some might need that income for living expenses, while others might want to reinvest for growth.
Yeah, I guess it depends on where you are in your financial journey.
For sure. And, it's also important to keep an eye on the overall market conditions. Sometimes economic downturns can impact dividend payments, so staying informed is key.
Right, like being aware of those economic cycles.
Exactly. And another practical tip is to set a budget for your dividend investments, just like any other investment strategy.
So, decide how much you're comfortable investing in dividend stocks each month.
Yep. That way, you can stay disciplined and not get caught up in market fluctuations.
And I guess keeping an eye on your portfolio regularly helps too, right?
Absolutely. Regularly reviewing your investments can help you spot any issues early on. You want to ensure those companies are still meeting your criteria.
Sounds like a proactive approach.
Definitely. And, using tools like stock screeners can help you filter for stocks that meet your dividend criteria.
Oh, I've heard of those. They can save time.
Exactly. Just plug in your parameters, like dividend yield, payout ratio, and it'll give you a list of stocks to consider.
That's so handy. It takes some of the guesswork out of it.
For sure. And remember, patience is key in dividend investing. It's more of a long-term strategy.
Right, so it's not about quick wins, but building that steady income over time.
Exactly. And, some folks might be tempted to chase those high yields or jump in and out of investments, but that can lead to problems.
Yeah, like missing out on those long-term gains, huh?
Precisely. And that's a good segue into the common pitfalls we should avoid with dividend investing.
Oh, I can't wait to hear about those. So Alex, let's dive into some common pitfalls when it comes to dividend investing. I mean, it sounds so appealing, right? Building passive income streams, but it doesn't always go as planned.
Absolutely, Jordan. It can be enticing, and many people jump in without fully understanding the landscape. One of the biggest mistakes I see is just chasing high yields.
Oh, right. Like, people see a stock with a really high dividend yield and think, wow, I need that. But that can be dangerous, can't it?
Exactly. A high yield can be a red flag. It often signals that something's off with the company. They might be struggling financially, and the dividend could be at risk of being cut.
That makes sense. So what should someone look for instead?
Well, it's crucial to look at the company's overall financial health. You want to consider their earnings, cash flow, and the sustainability of that dividend. If a company has a solid track record of consistent earnings growth, that's a good sign.
Yeah, I can see how that would help. What about the idea of diversifying? I've heard mixed things about that.
Diversification is key. Many new investors think they can just put all their money into a few high-yield stocks, but that can backfire. Imagine a scenario where one of those companies faces a downturn.
Right. So you're saying if that one stock tanks, it could really hurt your income stream?
Exactly. It's like putting all your eggs in one basket. Instead, a diversified portfolio can help cushion those blows. It's about spreading out the risk.
That makes total sense. I think some people might also underestimate the importance of research.
Oh, for sure. I had a client once who invested heavily in a company because they were excited about a new product launch. But they didn't dig deeper. The product flopped, and so did the stock.
Ouch! That's rough. So what should they have done?
Well, they could have looked into the company's past performance, industry trends, even read some analyst reports. It's about getting a well-rounded view before making a decision.
And I guess it's also about understanding the business model, right?
Definitely. Companies that have a clear, sustainable business model are more likely to maintain their dividends over the long haul.
I've also heard that timing the market can be a big mistake. Is that true?
Yes, it is. Many people think they can time their investments perfectly, but the market is unpredictable. Trying to buy low and sell high can lead to missed opportunities.
So what's the alternative? Just stay in for the long haul?
Exactly. Focus on long-term growth. If you invest in quality dividend-paying stocks and hold them through market fluctuations, you'll likely see better returns over time.
That's really encouraging. What about the emotional side of things? I bet that plays a role too, huh?
Definitely. Investing can be emotional, and fear can lead to poor decisions. I've seen people panic during market downturns and sell their dividend stocks. Then they miss out on the recovery.
That's a tough lesson to learn. How can someone manage those emotions?
One way is to have a clear strategy in place. If you set your goals and stick to your plan, it's easier to ride out those market fluctuations.
Right. It's like having a roadmap, so you're not just reacting to every twist and turn.
Exactly. And another pitfall I see is neglecting to reinvest dividends. Some people take them as cash, which is fine, but reinvesting can compound your returns over time.
Oh, wow. That's powerful. I guess it's about making your money work for you, right?
Absolutely. Over time, those reinvested dividends can lead to exponential growth. It's the magic of compound interest.
So what's a good way to recognize danger signs in your investments?
Keep an eye on dividend announcements. If a company suddenly cuts its dividend, that's a big warning sign. You also want to watch for increasing debt levels or declining revenues.
Got it. So staying informed is key.
Yes, and don't hesitate to ask questions or seek advice if something seems off. There's no shame in seeking help when it comes to your financial future.
That's such a good point. I think a lot of folks feel overwhelmed and think they have to figure it all out alone.
Exactly. Building a support system can make a huge difference. And remember, investing is a journey, not a race.
I love that. So for someone who might have made some of these mistakes, what's the path forward?
First, evaluate your current investments. Look for any red flags and consider rebalancing your portfolio if needed. It's never too late to make adjustments.
Right. And maybe set aside some time to educate yourself more about dividend investing.
Definitely. There are plenty of resources available, from books to podcasts. The more you learn, the more confident you'll become in your investing decisions.
And of course, don't forget the value of patience. It's not a quick fix.
Exactly. Building wealth through dividends takes time, but with the right approach, you can create a reliable income stream that lasts.
This has been such a great discussion, Alex. I feel like we've given our listeners some real-life insights they can take away.
I hope so, Jordan. Remember, it's all about learning from past experiences and making informed decisions moving forward.
Absolutely. And for anyone looking to dive deeper, we'll be sharing more resources in the show notes. Thanks for joining us today. So, Alex, we've talked a lot about dividend investing today, but let's get into some practical stuff, Like, what are the next steps someone can take right now to start building those passive income streams?
Absolutely, Jordan. It's all about taking those first steps, right? So I'd say the first thing is to set your investment goals. You really want to think about why you're investing in dividends. Is it for retirement? Maybe to fund your travels? Or just to have some extra cash flow?
Yeah, that makes sense. So getting clear on your why can really help shape your strategy. What's next?
Well, once you have your goals, it's time to assess your current financial situation. Take a good look at your budget and see how much you can comfortably allocate to investing each month.
Right, and I guess that means not stretching yourself too thin. Nobody wants to stress about money, especially when starting something new.
Exactly, and once you have that budget in place, you can start small. Maybe set aside a certain amount each month just for dividends. Even if it's like $50 or $100 to start, it all adds up over time.
Yeah, I love that idea of starting small. It feels a lot less daunting. So, what tools or apps can people use to make this easier?
Oh, there are quite a few out there. For beginners, I often recommend using apps like Robinhood or M1 Finance. They're user-friendly and have low fees. Plus, they let you trade fractional shares, which is super helpful when you're starting out with a smaller budget.
Fractional shares? That's interesting. So you don't need to buy a whole share of, like, a big company?
Exactly. You can invest whatever amount you want. So if you have, say, $20, you can buy a fraction of a share instead of waiting until you can afford a full one.
That's really cool. What about tracking dividends? Do you have any suggestions for that?
Yeah, definitely. There are apps like Simply Safe Dividends or Dividend.com that help you track your dividend income and assess the safety of those dividends, which is really important,
Safety is key, for sure. So what about books? Anything you'd recommend for someone looking to dive deeper into dividend investing?
Oh, absolutely. The Little Book of Common Sense Investing by John Bogle is a classic. It's not solely about dividends, but it lays a solid foundation for investing. And then there's The Dividend Growth Investment Strategy by David Van Knapp, which is more focused on dividends specifically.
Those sound great, and I bet they're pretty accessible to readers, right?
Yeah, they are. The authors do a great job of breaking down complex concepts, so you don't feel overwhelmed.
Perfect. So aside from reading and using tools, what are some habits people can build to stay on track with their dividend investing journey?
I'd say consistency is key. Make it a habit to review your portfolio monthly or quarterly. Just check how your investments are performing and if any dividends have been paid out.
That sounds manageable. And maybe set reminders like, hey, it's time to check my investments.
Exactly. And don't forget to reinvest those dividends when you can. Many platforms offer a DRIP option, dividend reinvestment plan, where your dividends automatically buy more shares.
Oh, that's a smart way to grow your investment without even thinking about it.
Right? And over time, that compounding effect can really boost your returns.
So to recap, start by setting clear goals, assess your finances, and then pick a platform to start investing. And don't forget those books and tracking apps.
That's right. And remember, it's okay to start small and gradually build your knowledge and investment. The important thing is to just get started and keep learning along the way.
Yeah, I think that's a great mindset to have. Investing doesn't have to be intimidating, right?
Not at all. It's all about finding what works for you and taking those steps at your own pace.
Well, I feel inspired to take action now. Thanks for sharing all these practical tips, Alex.
My pleasure, Jordan. I'm excited for all our listeners to start their dividend investing journey.
And that's a wrap for today's episode. Thanks for tuning in to Prime Wealth. Don't forget to subscribe and join us next time for more practical personal finance advice.
Take care, everyone.
Bye for now. Well, Alex, it's been such a great conversation today about dividend investing. I think we really covered some important ground.
Absolutely, Jordan. Just to recap a few key points. First off, dividend investing can really be a solid strategy for building those passive income streams, right?
Yeah, and it's not just about the money. It's about creating financial freedom, which is such a game changer for so many people over 40.
Exactly. And second, we talked about how reinvesting dividends can really compound your returns over time. That's super powerful.
Oh, for sure. And then, of course, we can't forget about the importance of diversification. Spreading your investments across different sectors to manage risk.
Right. And let's not overlook the fact that researching dividend stocks can be a bit more straightforward than other investment strategies. It's about finding companies with a strong history of paying dividends, which can give you a bit more confidence.
Yes. And I love how we emphasize the need for patience. It's not a get-rich-quick scheme. It's really about long-term growth.
Definitely. So if you're over 40 and looking to secure your financial future, dividend investing could be a great fit for you, right?
Absolutely. And remember, everyone, if you found this episode helpful, please like, subscribe, and drop your thoughts in the comments. We love hearing from you.
And if you know someone who's 40 or older and could benefit from this advice, share this episode with them.
Yes, please. And next time, we're diving into a really interesting topic. Roth versus traditional IRA. Which is better? It's going to be a great discussion.
I'm looking forward to it. Lots of valuable insights coming your way.
So, until then, take care of yourselves and happy investing.
Bye for now, everyone.